everybody, it's day 25 in my 30-day challenge in November where I'm talking about 30 ETFs in 30 days. But before we get into today's ETF, I just wanted to answer a question that somebody left on my YouTube video yesterday. Basically, recently we've been in a red market, so it's been pretty easy to buy low, buy the dip or buy below your average cost. So this person asked, what do I do when the market's green? So how do you buy positions below your average cost when the market is, continuously going up for say a week or two? So the way that I do it is simple. I have, say you have 10, 20, 30 positions. Personally, I was at over 40 and now I'm down to about 37 positions. But even when the market is green, if you look through your portfolio, chances are you're going to find a few positions that maybe you overpaid for, or maybe they're not doing as well as the market, because even though the market's going up, sometimes certain sectors are going down, or maybe a specific company's going down, right? So if you have a single stock ETF, that holds one company and they just had maybe their quarterly earnings were not as good as they were expected to be, so that particular fund is down. So in other words, go through your ETFs and see if you can find a couple that are not doing as well as the market is, and maybe they're below your average cost at the time. And then that way you can, you can add some shares, take advantage of the dip on those specific ETFs. The other thing you can do is, take a look at your holdings and try to find one that maybe is, maybe it's only up 1%. Your average cost is $25 and it's like $25.30 or whatever. So it's not really, you're not really averaging up that much, okay? It's not like you paid $25 and now it's trading at 35, where if you start buying, you're really gonna bring up your average cost, right? So I would look for something that's maybe 1 to 3% above your average cost. You could always buy an ETF like that. Like say, the ETFs that are currently down, maybe they're already a large position. You've already met your goal of hitting 5% of your portfolio, so you don't want to add to those positions. So you can look for one that's maybe 1 to 3% up. The other thing you could do is maybe now is a good time to start a new position. Maybe there's an ETF that you've been looking to buy, and it's maybe it's not too high. It's not at its 52-week high. It's maybe somewhere in between there and its 52-week low. So start a position and just buy a little bit. Don't go crazy because the market is green, but maybe buy a little bit, and then every week you can add to that position and try to DCA into it. All right, so that's the answer to that question. At least that's what I do. If you have a different strategy, let me know in the comments down below. All right, so today we are talking about Bloxs, and I don't want to go into a deep dive in the website like I normally do, but we'll just take a quick look at the first page of the website just to refresh people's memory as to what Bloxs is. And I will also link at the end of this video the video I did about Bloxs a few weeks ago as my Monday pair. So it's one of my weekly snowball portfolio pairs. Okay, so I'll link that video to the description, or you'll see it on the screen at the end of this video. And then that way, if you want to watch and learn a little bit more about Bloxs, you can. But this is just going to be very basic. And then I want to talk more about what's happened to Bloxs in the last month, because I'm sure we've all seen that the share price has dropped considerably. Okay, so Bloxs is the Nicholas Crypto Income ETF. And I'm just going to go over the fund summary. Bloxs is an actively managed exchange-traded fund that provides exposure to blockchain technology to enhance income and provide portfolio diversification. So Bloxs, for those of you who don't know, it does own some Bitcoin and Ethereum ETFs, but also ETFs of other companies or other companies that are in the crypto industry, in that sector. So the fund blends digital asset-related investments and traditional income-generating securities to capture growth potential in emerging technologies while maintaining a focus on risk-adjusted returns. The fund does not invest directly in Bitcoin, Ether, or any other digital assets. The fund does not invest directly in derivatives that track the performance of Bitcoin, Ether, or any digital assets. fund does not invest in or seek direct exposure to current spot or cash price of Bitcoin or Ether. Investors seeking direct exposure to the price of Bitcoin or Ether should consider an investment other than the fund. Although Bitcoin and Ether may each be referred to as cryptocurrency, neither is widely accepted as a means of payment. Okay, so what I want to focus on today is the share price of Bloxs and the NAV and their distributions. So a lot of people who are against any kind of covered call ETFs, or in this case, ETFs are right puts, they always like to mention the NAV erosion. So if you take a look at Bloxs, and when I bought it, which was on September 18th, was the first time I purchased Bloxs at $24.47. And then I kept buying it weekly. On October 9th, I bought it at almost its all-time high, which was $27.43. The all-time high was $28. And then it started to drop, right? From there, it started to drop, went down to a low of $16.36. Currently, I believe it's sitting in just around the $18 range. Now, what you have to take a look at, for example, is Bitcoin, right? Because it does hold Bitcoin ETFs, and a lot of cryptocurrency companies seem to go up and down with Bitcoin. Like if you look at Coinbase, for example, when Bitcoin's up, Coinbase seems to be doing well. Bitcoin goes down, anything with coin in it seems to go down. So at the same time that Bloxs hit its all-time high, Bitcoin hit an all-time high of $126,000. Now, Bitcoin is currently sitting at around $87,000. So you can see that the underlying holdings of Bloxs have brought the share price down. So it's not a case of NAV erosion. It's not a case that they're overpaying or that the fund is being run improperly, and then that's why it's grinding down the NAV. Okay, this is just a matter of the underlying holdings have dropped considerably in the past month, and so therefore also has Bloxs. Now, what does that mean for the distributions? If you go back to October, the distributions were a lot higher than they have been in November. And that's to be expected, right? As the share price goes down, the fund managers have less net asset value to write their puts and their calls against, right? So the distribution will fluctuate along with the share price or the NAV, okay? So what am I going to do? I'm going to continue buying Bloxs. I haven't quite decided yet how many shares I want to purchase, but I will come up with a number. And once I reach that number, I'll probably just leave it and just keep collecting the income and using the money to purchase other ETFs, either in this snowball portfolio or just inside of my registered account. The other thing is that when you're investing in something like Bloxs, you have to realize that Bitcoin, for example, is very volatile. And the problem is there's a lot of people who are very in favor of Bitcoin, but then there's also some people who are not in favor of it, right? And they like to try to short it, right? Just the same as they like to try to short strategy, formerly MicroStrategy. And right, so they're trying to make money by bringing these cryptocurrencies and these companies down, okay? Now, recently, I just watched a video from Mike on his channel, Health and Wealth, and apparently JP Morgan might be in the mix of that. So I would recommend looking up his video. He talks about it and gives a little bit more detail as to what JP Morgan actually did and how that might have affected the price of Bitcoin. And now it seems like a lot of people who are JP Morgan clients might be bailing from JP Morgan because they're not happy with what happened. So I would recommend, Mike's a great guy. I would recommend checking out his channel, Health and Wealth, and seeing what exactly happened. Anyways, guys, for me, I'm going to keep working on my my daily snowball portfolio, including Bloxs. But at the same time, I'm also building my foundational positions like T-SPY and TDAC, right? Because I want to have a solid base in my portfolio. I don't want 10, 20 years from now into my retirement to find out that I don't have enough money to survive on, right, to live off of. So make sure you're not just focusing on these ultra high yielders, but you're also building a base with the 12 to 17% yield funds as well. All right, guys, and remember, guys, this is just my journey. I'm not suggesting that you guys go out and buy Bloxs. All right, if you're interested in it, then definitely go into their website, read everything you can. Maybe take a look at the prospectus. It's a lot of information, but you could read through it. You can even use AI, right? Ask Chat GPT some questions, and it will go through the prospectus and it'll cite it for you, make it a little bit easier to find. All right, guys. So tomorrow's day 26. We're getting almost near the end of this 30-day challenge, and I'm going to come up with something new for December. I'm not going to do the same thing, obviously, but hopefully we can put out some good content in December and help people, build their income portfolios, understand some important strategies. All right, guys. So until tomorrow, bye for now.